Tell us from your vantage point what you're seeing in terms of how the market is functioning after these giant moves across assets.
Well, I think there's a whole lot to talk about. I mean, you've had a lot of guests on today with a lot of different opinions, but you know, the markets for the most part are functioning quite well, even though they're going in high. The volatility is quite high. We are still seeing a tremendous amount of trade and people being able to do their risk management. When you know, I think one of the real issues that you're seeing, Sarah, here is this reminds me a lot after the '08 crisis when we were going to get into new regulation, except nobody knew what that regulation was going to be. So what we're seeing now is complete unclarity as it relates to the marketplace. No one knows exactly what's going on as it relates to the virus. So if you want to get some stabilization to the marketplace, I think we need we need to get the test kits out into the hands of the public. We got 75,000 test kits today. And, you know, for the most advanced country in the world, we're not doing that. So you can't have 500 cases reported here in the United States and 16 million quarantined in Italy and saying they're both correct. Something's wrong here. And the markets, they know that. And the markets are trying to figure out some clarity. So whatever it is, I would be hopeful that our government, instead of trying to slash the rates to zero, would get these test kits out into the public domain so we can figure out exactly what it is, and that will help the overall market in general, knowing exactly what it is.
And Terry, how are markets functioning? I mean, not just the last couple of weeks, but particularly the last 24 hours. Clearly, extraordinary news flow over the weekend when there's not much liquidity in various different futures markets. How have things functioned in the last day or so?
Yeah, they're functioning just fine, and there's liquidity. I mean, I've heard some of your earlier guests today saying that there's not enough liquidity in the marketplace. Well, you know, the bid offer is going to get wider in this high volatility. I don't care what you're trading. It doesn't matter anything. But, you know, we're still trading just under $1 trillion of notional of E-mini S&Ps every single day. So there is plenty of liquidity. It's just at a different price levels than it historically is when you don't have the volatility. So the markets are functioning properly. The circuit breakers kicked in, as we talked about earlier. The oil's been a big story. As you know, the input cost for U.S. producers is between $40 and $50 a barrel. I mean, the Permian is the cheapest at $40. You know, your earlier guest was talking about this. When you look at oil in Saudi Arabia, their input costs are between $20 and maybe as low as $12. So it doesn't mean it's going there, but their threshold for pain is a lot greater than ours. And that's why it's important for people to use the markets like ours in order to defer some of the risks.
Wanted to talk about the impact of trading halts. I mean, you guys halted futures, right, last night when we saw the 5% decline. What is the impact of that? How does that help or hurt the process, especially when you have the rise of algorithmic trading?
Well, here, and that's another thing. Everybody wants speed for everything they do in life, but they don't want to have it in markets. So we want to make sure that markets go nice and slow for us as we want our computers to be able to, you know, search anything in a nanosecond. So that's not the world we live in, sir. So algorithmic trading is not the issue. The markets move quicker like everything else in life. They're efficient. You know, we were down to 7% this morning on the halt. That's really where we halted was this morning, and just in coordination with the other marketplaces. So again, I think they're a good thing. I think it gives people an opportunity to reassess what's going on. You saw the circuit breakers kick in this morning, and actually you had a little bit of an uptick. I think, you know, I'm not going to predict the markets, but I do know one thing. Markets hate uncertainty, and that's exactly what we have right now. So I would hope that our administration would get these test kits out to the public, and everybody that does not have an MD after the name, stop saying wash your hands and call your doctor. You can't even get a hold of your broker, let alone your doctor. I mean, we need to make sure we know exactly what we're dealing with here.
Terry, gauge for us with the amazing experience you have, what level of fear you feel is out there at the moment in the marketplace. We hit the circuit breaker, oil's down 25%, the VIX is above 50. Do you have any sense that you feel like fear has peaked or is peaking?
I don't know if it's peaked or peaked. I think there's uncertainty, and that has not peaked yet. And that's my whole concern that I have, Wilfred, and this uncertainty could be alleviated. I mean, I don't want to see the numbers go up. No one does. But if they're up, we should at least know about it, and then we can at least assess what we're dealing with. But we can't assess what we're dealing with. So it's really hard to say that, you know, the uncertainty in the marketplace or the fear factor, for lack of a better term, is that it's peak or it's going to sell off from this point or go up from this point.
Really quickly, Terry, just when you do have the market halted, is there any concern about ETFs still trading when the underlying security, that is the index, is halted? I mean, this also feels like we're in kind of an experimental regime with the rise of ETFs and the fact that there's been so much money in them.
Well, you're absolutely right, Sarah. These ETFs are just started trading in overnight hours just as of recently, not that long ago. I mean, a lot of them are completely illiquid. There's some that are liquid. So, again, we don't list ETFs here at CME. So, we're very focused on our index businesses and making sure that we can manage the risk. So I really don't want to comment too much on the ETFs other than, as well as I do, there are many of them that are just as illiquid as those that are liquid.